Well, hello there, Mini April.
How are you?
I'm doing very well. How about yourself?
Doing well. Yeah, I get that all the time.
Oh my gosh, it's uncanny how
Yeah.
similar y'all are.
Mhm.
That's
Yes.
crazy. Do y'all get like taken for sisters all the time?
Yes. Yeah, and it's crazy how much I definitely take after her more than my dad, but
Hmm.
yeah.
That's awesome. So, where am I finding you? You're in College Station?
Yes.
Did you go to school there?
I did 2 years at Blinn, got my associates, and really just wanted to get into new home sales. And
Hmm.
obviously, both my parents' history, I knew, I would listen to my mom sell homes in my car
Oh
seat.
yeah. Yep.
So,
That's my
um,
kids too.
yeah, yeah,
Yeah.
exactly. So that's kind of where I found myself, just for different reasons. I wasn't loving school, so
Hmm.
I just wanted to get on with it, and here I am.
That's awesome. So, how long have you now been selling new home officially? Because you've probably been doing it as a kid and not even realizing it, but getting
Well,
paid to do it.
I did an internship with Brightland over the summer, so that's whenever I started. So I started in July,
Okay.
and so yeah, I guess it's only been about half a year.
Okay. How many homes have you sold in this half a year?
Oh man. Got to my internship, 6, so a little bit over 8.
That's great. So, I
Mhm.
mean, one a month.
Yeah.
And do you have goals for this year?
I do. I do have like my personal goal is 3 a month, but I started with this builder Blackstone who's in College Station, and the timing of it was really perfect because I was ending the internship and
Mhm.
I wanted to start somewhere, but I was still living. I still had a lease here in College Station. And so I was like, you know what? I'll just go and work for them. And the connection, the way that it happened, it was very like purposeful. So I was like, okay,
Yeah.
so I feel like I'm kind of meant to be there, even if it is for a little bit. But they are a smaller builder, so I've been averaging, like you said, like 1 or 2 a month
Mhm.
at this point. But who knows where I will end up later on down the road. But right now, I'm enjoying learning a ton
Mhm.
and getting like hands-on experience, especially because Blackstone is a smaller builder. I go
Yeah.
to pre-con meetings, design center meetings. I do red lines. I get to do like everything that as a sales rep for Brightland I wouldn't even touch.
Hmm.
So I'm learning a lot.
That's awesome.
Yeah,
So, I'll stop quizzing you in a second, but
no, you're
uh,
fine.
I'm I'm interested to know, what do you love most about your job and what do you like least about your job? And I won't tell your boss or your mom even or anybody, but like, what do you love most? What do you hate most? Or
Oh
dislike? Hate is
man.
strong.
I don't know. I love everything. I think I'm such a positive person that it's kind of annoying sometimes. Like I have in just the 8 months that I've been working, there's not been like a single day that I've like dreaded waking up and going to work. It just
Hmm.
even though I have to work on the weekends, I'm totally okay with it.
Hmm.
Um, I don't know.
What's some biggest challenges that you see then? It could not be like bad, but
Yeah.
what's the biggest challenges that you see?
Yeah, I would say that the biggest challenges are probably just the College Station market.
Hmm.
It's very, very different than the Austin area. Very different.
100%. Yes. My
Mhm.
brother ended up going to A&M when I went to UT. And, we're not originally from Austin. We're originally from
Yeah.
Arlington. And yeah, the culture, lifestyle, totally different buyer profile. And
Mhm.
so, but that's kind of the name of the game in sales as a whole, is just adaptability, right?
Yeah.
How fast can you adapt? How fast can you identify their needs versus
Mhm.
their wants? And market, like, I don't know how to say this without it necessarily coming off rude, but like Austin, super affluent, over the top, very well informed. They have a lot of options and they'll remind you over
Mhm.
and over and over again. And so what they think that they need versus what they get, and they start, it's a high level of competition. I don't know if that's necessarily the same, but probably a higher level of trust-based selling in College Station.
Yeah.
Referral sources matter. If so-and-so referred you, reputation. And, Austin, not that reputation is important, but it's really rather short-lived. It's all about the hustle and the deal, and it's a lot of the sizzle and not so much the steak at times.
Yeah, exactly. Yeah, that's a lot of my buyers are professors, engineers, doctors, all of that. And I think that's why I'm enjoying learning more and like doing stuff like this, because I want to be
Hmm.
able, like, these people are so sophisticated and I'm 21 years old. Like I need them to be able to trust me that I know what I'm doing despite my age or whatever.
Yep.
So that's why I'm very thankful that you're teaching me today.
No, thanks for indulging my random email to say, hey, you need this. And you're like, I want to do it.
Yeah.
Yeah, I did a revamped version of this because I've always done it for years. I used to be the in-house at Brightland when it was Gian.
Mhm.
Your mom was VP of sales and marketing, I think. Yeah,
Yeah.
she might have been an on-site, I think, and then she went into that. It's
Yeah.
been fun watching her, progression in her career and
Mhm.
stepping into those shoes for better or worse from her vantage point some days. But this is something that I've always found helps. Like, I'm going to spoiler alert. The more I equip my on-site agents, the better it makes for the
Yeah.
experience and for my job, right?
Mhm.
And it's not to make loan officers out of you guys. It's just so that you understand just the components up front. And
Exactly.
it may be the difference between a sale and not a sale. It really
Mhm.
could come down to, oh, yeah, we can do that, and here's how. Or I am familiar with that, and we can replicate that. So
Mhm.
just knowledge is power. And in sales, the more knowledge and the more leverage that you can build in a positive manner of really being able to serve them and their needs, I mean, makes your job better. And the more fluent and better you get set up, then your lenders also kind of feel the same. Oh, so speaking of lenders, who are you all set up with right now?
So we actually do not have any kind of joint venture or preferred mortgage lender. I have been, and that is a good benefit. Most of the buyers, because they're older, they've done this a couple of times. I still have like first time home buyers where I will like have to refer them or second recommendations, but really Michelle Alberts with CMG has been my go-to.
Mm-hmm.
Even because it kind of started whenever I was interning. I had some
Right.
sticky deals that she was able to, pull through on. So there's two other sales reps at Blackstone, and they kind of just refer their own lenders kind of
Just
thing.
whoever they get build trust and rapport. And
Yeah,
the lender can really not just overcome obstacle situations,
hmm
but really work as a partner with you in relation to helping you co-sell.
yeah,
And so, in the sales process, I mean, if you've ever bought anything, especially something expensive, you're like, well, of course you're going to say that. You want me to buy this home. So
yeah,
you seem awfully trusting and nice, but there's always that kind of like that little like, I don't know if I'm really 100% going to validate what you say because you have a lot to gain in this.
yeah.
And so, from my vantage point and experience, as a lender, I get to say whatever I want, like
hmm
whether you buy or not. And here's the best decision, here's the best program. And by the way, what I love most about Blackstone is that they include X, Y, and Z as a standard, and other builders are not doing that. Well,
hmm
when I say it, it's like, well, this guy, he's
Yeah.
not trying to sell me the home. And
hmm
so to collaborate, with your lender, I think is really more important than most salespeople think. It's not just rates and fees and answering your phone and closing on time. Yes,
hmm
those things are important, but the collaboration, that's where it really comes into play. Because also buyers were telling me things that they would never dare tell you.
Yeah,
Oh,
exactly.
I was fine when Olivia told me the price was 500. I just want to see what kind of a deal I can get.
hmm
Maybe I'm honestly at the end of the day, I'm fine at 500. I
hmm
know you're asking for 475 or 480, but let me show you what the difference in the payment would be. Oh, well, we're still hitting our payment goal at 500. Look, I'll tell them, I want you to get the house for 400, but they don't let me sell homes for very good reason, right? And the
Yeah.
reality is you've identified the best house. If there was another home in question, we wouldn't be talking right now and you wouldn't be engaging with Olivia.
Mm-hmm.
So let's go ahead and agree that this is the house you want to go with, and let's just focus on the best financing we can. Now, on the back end, hey, Olivia, they're good to go at 500. Their biggest, pain points were, I don't know, they really wanted to upgrade to a tub instead of this and whatever. And you're like, great, I can make easy work of that. And
Mm-hmm.
then we really collaborate in a way that it's not to be sneaky. It's just really sometimes buyers don't know what's best for them and they're so guarded and shielded, or they're so smart that they can't listen to Olivia because I'm a professor on tenure. You can't tell me
Mm-hmm.
nothing. I know it all.
Yeah.
So I would implore you to work on the cadence with, your lender, and just being able to tell them up front, hey, I'm sending you the Smiths. Their most important goal is flat out payment. They've told me they have 50 to 75,000 to work with, and they really are payment sensitive, or they think it's payment, but they're fixating everything on the interest rate. What are their hot buttons? What are their reasons to say no? And so if you can kind of preemptively prime the pump for the lender conversation,
Mm-hmm.
it's amazing how great everything goes once they come back to you like, man, Michael was great. He knew that the interest rate was so super important to us. And even if you tell the buyer in an introductory email, hey, Michael, meet the Smiths, their most top three things are, uh, 3-bedroom, 2-bath with primary downstairs. And they really want to get an interest rate, in the starting with a 4. And I told them that's probably going to be very difficult, but I trust that you can lead them. By the way, you have 4% and title policy to use as incentives, right? And then we can really structure it. And sometimes by the end of the conversation, they're like, I thought it was the rate, but why would I waste my money on that when I could cover these closing costs and keep my cash out of pocket and still hit my payment goal? So yeah, enough about that. Michelle is great. CMG is awesome. I've known Michelle probably somewhere since 2003 or 4.
Yeah.
She's really, really, really good. She's a true professional. Works very, very
Mm-hmm.
hard. So, did you get the attachment that I sent?
I did, and I have it printed out too.
Nice. Did you have a chance? Not good or bad. Did you look at it at all?
I did. I did skim through it a little bit.
Okay. There's some spots that we're just going to kind of go over a little bit faster, and there's some spots we're probably going to camp out a little bit. And if you've got specific questions or things I don't have on here, just throw it out. Like this is a safe zone. There's no bad questions. In fact, I challenge you to ask me a question relating to mortgages that I've never been asked before. If there's something that you can think of, yeah, bring it on, right? The last time I did this, like I was telling you in the email, it went over really, really well. And it's geared towards, your optics, not to be a loan officer, right? And so I think there's some things that are just kind of boilerplate that you need to know. And then there's some I think that will be more instrumental in helping you make sales, just to understand, the power of some of the products and understanding, what is the meaning on some of these things. If people bring it up to you, you can be like, oh yeah, ICD, I know all about that. That's the initial closing disclosure. My lender sends it out a week before the close date. I know your realtor's got you real worked up about it, but we've got you covered, right? Address it, then dismiss it. It's not something for you to be worried about. So I'm going to, let me do a screen share here. And that way, whatever you have in front of you is the same thing I'm looking at. Do you see the little outline?
I do.
Okay. So we'll start. This stuff is really just shameless bragging on that first page. It's just some things I think are important. Working with a lender that has no overlays, and overlays, simply put, those are just extra rules that lenders will put on top of their mortgage approvals that now a buyer has to adhere to. So not saying bad, but example, Brightland Mortgage, which used to be Advisa. they have overlays. They have an extra set of rules because at the end of the day, it's not Advisa's money or Brightland's money, the joint venture. It's somebody else's money. And typically they have three other somebody else's that they have to send the loan to. So when
Yeah.
Olivia Maki gets a loan through me on that Brightland mortgage, you go through all the dance, you do everything, and then after you close and got your keys in your hand, Brightland takes Olivia's mortgage package and says, "Hey, Bank A, here's the Maki loan." And they're like, "Okay, great, great, everything's fine. You adhered to all of our rules." Let's just say, for example, though, Bank A doesn't like it. Bank B is the one who's going to buy the loan and service it. Well, Bank B could have all of Bank A's rules plus one or two more. And so you usually have three different banks that you want to be able to offload the loan to. And that means you could have, instead of three rules, you could have 9 rules. So sometimes those rules can inhibit a lender from doing the loan because at the end of the day, it's whoever's really loaning you the money, it's their rules. It's not Advisa's or Brightland. You know that they used to be Advisa, right?
Mm-hmm.
Okay. So that's what an overlay is. When you work with directly with a bank or a more independent mortgage bank, then those rules are out the door. They don't have those. So it really just comes down to those 3 rules. And that's an advantage of having that type of preferred lender relationship. We'll go into some of these other things in a little bit more in depth. Boost is our in-house down payment assistance program. It's phenomenal. I don't think it's just for your first time home buyers. There's plenty of people who have bought, say for example, in the last 3 to 4 years, and they bought at a really high place in the market and the market softened up. And now that $500,000 home is $490, even though they've been at 3 years or 2 years. And now they don't have the equity when they sell their home to take that money from the sale and put it into the new home with Olivia. So your solution to that is you don't need down payment. What do you mean I don't need down payment? You don't need down payment. We have programs that help facilitate 0 down payment. Whether you have a home that you're selling or you just haven't saved up enough, you're a recent graduate, recently married, you recently went through a divorce and you don't have money. I don't care where you're at in the life spectrum. Some people have the money for down payment. I have a client right now. He's got like enough to put, 10, 15% down. He'd rather keep the money in his pocket than put it down on the home because he's also an investor and he wants to buy and flip other properties. So for him, he's like, you mean I can save 20 grand and not put, that money down? I'm like, yeah, absolutely. So down payment is not as necessary as you would think. Don't create any barriers that you think could not be overcome, right?
Right.
The only barriers I would say is if someone says they have a 400 credit score, yeah, probably not buying. If they don't have a job, probably not buying, unless they're like super wealthy and we could turn something with their assets that they have. But don't create barriers. Say, hey, I want to say yes to everything, but let me have you talk to my preferred lender. He may have an option. Non-QM, back in the day, and I don't know how relevant this terminology, when I say the phrase subprime loan, does that mean anything to you? Subprime? No, I didn't think so. Subprime, like you heard about the mortgage meltdown, or some people refer to 2008. And you're like, what is that? What's the big deal? 2008 was when a lot of subprime loans were done. They're really bad loans, and it collapsed the whole, like not just the U.S. economy, it affected worldwide. The reason why I say that is non-QM is kind of like a subprime loan, but better. It's a little bit safer. It's just loans that don't meet the standard criteria. So stuff that like, hey, I have a job, but I don't have pay stubs. What do you mean you don't have pay stubs? I get paid in cash. Like I own a landscape industry company and they all Venmo me and send me Cash App. And I'm like, oh, well, that's weird. Well, you need pay stubs and tax returns. Well, maybe that loan fits into one of these non-QM loans. So non-qualified mortgage. 2 other things I'm going to talk about, and then we'll jump into, kind of the more detailed is we do have a buy before you sell program. So right now, new home sales could be doing a lot better if they didn't have buyers that were contingent. So, Olivia, I'd buy a home from you, but I got this other house I've got to sell. because X, Y, and Z. My down payment money's in there. I'm a veteran and my VA eligibility is tied up in the other home, whatever the case may be. Well, now you can tell them, hey, we have a program that can help you tap into your equity, have that home sold, buy the new home, move into the new home, vacate the old home, and sell it after you close. Which typically, if you think about it from a listing agent's perspective, what's easier to sell? A home that's move-in ready, tip-top, cleaned up. It doesn't have, all your, blend college materials up and pictures of your dog and your friends, or a more basic stage home that looks like it's ready to be moved in, right? Well, the move-in ready home is going to be easier. So I sell it more as a value add to, you get to move one time and not twice. Your listing agent's going to love this because they get you and all your crap out of the house up front. And 3, usually you can sell your home for a better value than with all of your stuff in the home that maybe doesn't appeal to everyone. So that's the buy before you sell program. We can talk about that a little bit more in depth later. As we're going to the second page, we're going to start kind of high level. When you hear different loan types, super high level, you've got conventional loans. And I'm not going to stick directly to the script, but conventional loans, a little bit stricter, right? People think that they are better, not necessarily. Every situation is going to be a little bit different. But a conventional loan, typically, you're going to see 5% as a minimum down. They do have a 3% down. They have a great first-time home buyer as long as they don't make too much money. But they're stricter on their guidelines, and they go higher in their loan amounts. The next most common one is going to be an FHA loan, Federal Housing Administration. Much easier to qualify for an FHA loan than a conventional loan. Lower credit score criteria. They go to a higher debt to income ratio, which is the relationship between their income and the liabilities that they have, like credit cards, student loans, auto loans. So FHA is easier to qualify for, but it does have some drawbacks in the fact that they have a lower max loan amount. They have, in a lot of cases, higher mortgage insurance. And then they also have an upfront mortgage insurance. Not things that you need to memorize. Just know kind of the basics is conventional can be a little stricter to qualify. FHA is a little bit easier to qualify. They're both great loan options. Just depends on the scenario which one a buyer would go with. Okay. Then you have VA loans. Easily put, it's for veterans or spouses, widows of veterans. So if the veteran passes, then the spouse still does have VA benefits. And VA loans, hands down, the best loan program option out there because you can do 0 down, no mortgage insurance, has some of the most lax guidelines compared to FHA and conventional. Much easier for a veteran to qualify under those terms than an FHA or a conventional loan. But you got to be a veteran. Not my uncle's a veteran, my aunt was a veteran, my cousin is a veteran. I don't know. I think maybe that only works for getting a USAA account, but doesn't help you in getting a VA loan. Okay. Then you have USDA. I always mess up when I say this word. It's for rural. I hate that word. Every time I think it's going to come out normal, it doesn't. It sounds like Scooby-Doo, like rural.
Yeah.
Rural. And it's for the development of more rural areas. I'd probably say you've got some decent exposure in College Station to what would be considered USDA. It's also a 0 down program. It's a little bit stricter on the guidelines to qualify because they don't go as high as FHA on their debt to income ratios. But they do have, quite a few criteria that have to be met for geographic location, debt to income ratios. Oh, and you can't have like too much in assets. Like if you have too much, like you could be overqualified and declined. Is that crazy? Yeah. Like, oh, you make too much money, you're declined. You have too much liquid assets, you're declined. Okay. Then we go into jumbo, which quite frankly is just when the loan amount exceeds the 806 marker for conventional. What are your price points of the homes you're selling?
I think we average mid 500s.
Yeah, you're not going to be in any kind of a jumbo, but let's
Yeah.
say you have like $1 million home and they're not putting 20% down, then you would be in some kind of a jumbo criteria. Then we talked a little bit about the non-QM, which are just, those are the out of the box type of loans. Like, hey, I want to buy a home, but I only get paid in cash. Hey, I want to buy a home, but I don't have a traditional job. I'm self-employed and I write off all my income. Hey, I want to buy a home, but I don't qualify under traditional methods. So these are going to be a lot of non-traditional loans. Okay. I'd say the majority of your buyers are going to be conventional and FHA. Every now and then you're probably going to have a veteran, but
Hmm.
those are going to be the majority of the loans you do.
Hmm.
Any questions on those? Kind of self-explanatory, but if you have something, you can throw it out.
Yeah, no, this is all looking good so far. I will say Brightlands, whenever I was interning, they kind of did a little mortgage 101 thing, but after working for a couple months, like having the experience, it clicks. It makes more sense.
Yeah, that's kind of always the case. Like, just to be fed a whole bunch of information but have nothing to adhere it
Yeah.
to, it
It was
doesn't
like
work.
in one ear and out the other.
Yeah, like I have to directly use it right away, and then I have to teach it in order for me to learn it.
Hmm.
Like otherwise, it just doesn't stick. So,
Hmm.
yeah, a lot of these things don't matter until you're in a situation like, oh my god. And that's why I thought these notes are really, really good because you can be like, hold on one second. Where was that? Oh yeah, here it is, right here.
Yeah.
Okay, yes, I'm back again. Now I know what you're talking about,
Hmm.
and I think that this would be a good little, tool for you to be able to refer to, in the future.
Yes, this is
So
helpful.
now that we have the, top of the pyramid on loan programs, right? The loan types. We're going to go into talking about this whole thing of, a rate buy down and temporary buy downs, right? Rates are, let's just say 7% right now. And it's very difficult because people got used to whatever rate they have on their current home. Olivia, how can I buy a home? My rate's 2.5% right now. It's like, yeah, but is that rate worth whatever is the pain point of why you're here in front of me? No, that's why I'm here in front of you, but I can't walk away from 2 something percent. Like I get it, but at some point, there's the pain is so much that the pleasure and beauty of your low interest rate doesn't matter because you're in a 2 bedroom, 1 bath, and you've got 3 kids now, and you started, with one. So I get it. So the advent of doing temporary buy downs became all the more rage because if the rate's 7%, someone could have 4% on a 3-2-1. That'd be 4% first year, 5% second year, 6% third year, and then 7% for the remainder of the term. And you're smart. It's like, yeah, why would somebody do that? I mean, still like it's not like a fix like forever. It's just a temporary. Well, yeah, it's called a temporary buy down. I mean, no duh. But the reality is it's a great transitionary loan product. It's not a forever loan product.
Hmm.
So people want to do this sometimes so they can buy a little bit of time between now and when rates drop or when something else changes. Maybe, you know, the husband or the wife is back in school and they're going to have, dual income, but it may be a year or two before they get there. They need something to just kind of alleviate the pain until they get to that point where they have both incomes, right? It's a perfect example. That's a fantasy land example because the majority of the time, the psyche of human nature is just like, man, just whatever I can do to justify getting in this house right now. And if I can get 1 to 3 years worth of reduced payments, like I'll take it and just pray, dear Jesus, make these rates drop, right? And so that's the reality. I'm not going to fluff you and be like, oh, this is great. Every single time someone's got a transition. Like they usually don't. They just want to do something to help them get in the house and just be able to have some extra cash flow to make ends meet. What does
Right.
the future hold? Nobody knows, right? So I think it's great from a sales and marketing perspective because, you could go and advertise like a 2.99 interest rate,
Mm-hmm.
and that gets the phone to ring. And then
Yep.
they come in and they talk to you, and you know what? Hey, I'd love for you to have the 2.99. I need for you to get with my lender because we have a limited supply of this program and this product. And I want them to run you through the 2.99 as well as every other option they have because I want you to make a fully informed decision on all your lending options. I'm not trying to talk you out of it. I think the 2.99 is great. However, my lender is the one who's really going to be able to walk you through and make sure that's the decision you want to go with. Okay. So again, from a sales and marketing perspective, some people are just looking whatever's shiny. And honestly, you got to have no shame in that game.
Right.
Whatever gets them to your model home, to fall deeply, madly in love with the house. And if it was the 2.99 and they don't end up using it, it's not like they're going to be mad at you. They're
Yeah.
just going to be like, great. Well, you have other great options. Maybe I don't want the 2.99. Maybe I'd rather have, the fixed, 5.5 because I can still live with that payment. Okay. So the temporary buy downs take whatever the rate is. And if it's a 3-2-1, then it's 3% lower the first year.
Mhm.
If it's a 2-1, it's 2%. If it's a 1-1, it's 1%. And so I would say more often than not, it's really, really great for marketing. And it's just good for some people who are just fixated on they got to have some specific rate. You know what? Not you, not myself, hopefully not their realtor. Sometimes they get in the way and do more harm than good. We're not going to talk them out of it. We'll educate them on options A, B, and C. And at the end of the day, whatever gives them that sleep at night factor and justification to pursue the home, that's what we're going to give them, right? So those are the whole temporary buy downs. Um, any questions? I could go further in depth on that, but any questions on temporary buy down?
Um, no, I don't have any questions. Those all make pretty good sense to me. And I think that especially over here and with the builder that I work for, those are what is selling our specs because we are primarily to be built.
Mm-hmm. Oh, good. Okay. Yep. Yep. And
So yeah, so we are I specifically am like relying on these 2-1 buy downs to
mhm.
advertise. So
You can advertise on your to be built with a temporary buy down and call it an insurance policy against rising interest rates. Because if rates go up, hey, you have this feature and you're in charge of however you want to apply your incentives. So think about it as an extra. How do you sell to be built with it? Man, this is great. You have the opportunity that when you build with us, you're insulated from whatever happens with interest rates. You have the ability to do a 2 or 3-2-1 buy down. That means your first year rate could be 2 to 3% lower than whatever the current market rate is. Now, you don't need to go further in depth, but those are the types of one liners I think that get people off the bubble.
right.
Like, I don't like your inventory homes. I need to build to suit my needs, but I'm scared of what's going to happen with interest rates.
Hmm.
Okay, I hear you. I've had an exact client just like this, and they felt comfortable moving forward because they utilized the incentives that we have in order to get a below market interest rate when the day comes that they're finalizing their loan and the home's done.
Yeah,
So,
we haven't actually done any of the 3-2-1 buy downs on our to be builds.
of course not. It's not a common thing. I just
Yeah,
want you to have that in your back pocket because what if that's the difference between a sale and not a sale?
I know. Yeah, and I haven't even thought of that. So we've only really been doing that on our specs.
Yeah. So you're not going to sell it at a specific interest rate. You're going to say, hey, this is an insurance policy against rising interest rates. You have this available. Now,
Mhm.
even stronger than that is, well, if you love the rates where we're at right now, if you would buy this home and you're okay with rates, well, we have long-term rate locks. You can lock in your rate
Yeah.
6 months, 8 months, 12 months with a float down feature. So don't die on the hill of rates are too high now or on the hill of we don't know what rates are going to be at in 6 months. You
Hmm.
can you can eliminate that objection,
Right.
right? And that's the name of the game. It's like I give you a problem, you provide a solution.
Exactly. Yeah.
until you can get to a point of like, hey, I've answered all your challenges, your solutions. What's stopping you from buying? So
Yeah. Exactly. Well, that's good to know.
yeah, that if I could, I would really just do a whole class just on objection overcoming. Like
Yeah.
that's my favorite thing to camp out on, you
Yeah.
know? And that would be a much shorter class than this. So maybe we'll do that after we let this stuff sink in, because I'd love for you to write down every single objection you have and just like you be the buyer, I'll be the very horrible on-site sales agent, you know, because you do it much better than I would. But I would love to do a whole class just on it. That'd be fun.
Yeah. No, that would be great because I feel like that I love overcoming objections. That's probably one of my favorite parts of the job. But
Mm-hmm.
whenever it comes to the mortgage side of things, I want to be, get to the point where I'm quick with it. And
Rehearsed.
yes, exactly. So I will start writing down those objections, but that would be great.
Oh, please do. Yeah. And
Yeah.
we don't have to have a formalized thing like this. You can send me whatever. And
Yeah.
quite honestly, use whoever and whatever. This isn't a like, if you don't send me deals, I'm not going to help you. I mean, I'll tell you this straight up. Your mom has done a lot for me and my family. She really, really has. It's some funny stories I'll say for another time, but like, I would do a lot for you and your family. So don't feel like compelled. Now, don't get me wrong. I won't turn away your referrals if you want me to do the loan, but I don't want you to feel I'm not sending him anything and I'm asking you. Like, this is not like one of those types of relationships. Okay. So that's temporary buy downs, and we'll do a objection overcoming class next. Now we're into down payment sources. Okay. Again, every single one of these is an objection. Hey, I'd buy a home. I still have a down payment. Well, you don't need one, first of all, because my lender will provide you up to 5% that you can use for your down payment. So that can eradicate that to begin with. But the reality is they can get down payment from a family member. If Olivia wanted to buy a home today and it was a $500,000 house, and she's like talking to Michael, and I'm like, hey, Olivia, so where's your down payment coming from? Well, I don't know if you know this or not, but I don't have a lot of money saved up. I just started this job, this, that, and the other. Like, okay, well, I heard you got a mom that's like rolling in dough. Like, can you ask her for a gift? Like, maybe. How much? I don't know. Let's start with like 25,000 since you have nothing, and that'd be 5% down. So you talk to mom, and yeah, she's willing to do that. And so a gift from a family member. I know that's kind of a no duh. That's the easy one. You probably already knew that. But also it can come from tax refunds, home equity line of credit, their IRA, 401k. All of those sources can be used for the purposes of their down payment, as well as down payment assistance programs. What can't be used, like I went and got a loan on my car. Okay, well, if you went and got a loan on your car, we need to document the source, or I got an advance on my credit card. Like, you can't use that. That's borrowed money, right? Um, this is a yes and a no. I have cash like in my bank account, or in my bank account, in my safe, or under my mattress. I have all this cash. Ugh. Typically, underwriters go, you either are a drug dealer or you work for Al Qaeda, but either way, you're laundering money. Like, definitely. It's like, well, I know you're not, but can you show me where that cash came from? Yeah, I sold this tractor to my buddy in, Brenham, and he's gave me all this money in cash. Okay, can you show me the bill of sale? Can we document it? We might be able to get around that and go, hey, this cash didn't come from drugs. It came from this guy, right?
Yeah.
Or there's some other probably creative ways of finding and using it, but just straight up green cash is by itself ain't gonna work, right? So those are the kind of the basics on down payment funds, where they can come from, gift funds in the process. Any questions on those? Kind of, again, so much of this is self-explanatory until
Right.
you're in the middle of a situation, and it's like, Shoot, I don't remember. I'm not a loan officer. You know, I don't know if you can do that.
Yeah. No,
So
the analogies help though.
no, absolutely.
Yeah.
Now, the next one are the common mortgage myths. And I think this is something that we both probably enjoy, which is overcoming challenges. It's just every single one of these is really, you'll hear it, if not, once in your career, multiple times. I need 20% to put down. No, you don't, right? You have options that are zero down and you have FHA. So you don't have to have 20%. Or they say it's 20% for good financing, for great financing. Like, well, let's define what is great financing. Well, the best terms. What's the best? Instead of best terms, why don't you tell me what's a realistic payment range and goal? Let's get them to quantify what it is that they want. Otherwise, how do you address that? How do you overcome? My best and your best could be two totally different bests, right? That's kind of vague. Like, everybody wants the best terms. I haven't met a single person that's like, yeah, I'd like the second best or the third best. Like, I'm easy. No, everyone wants the best. But let's talk about that, right? Then you start changing the conversation from wants to needs. Well, as long as my payment's 2,500 or less, like that's where I really need to be at. Well, how much are you able to put down? I have 100,000. Okay, my house is 350 and you're going to borrow 250. My lender said I could use 1% of how much you borrow as the payment, as like probably the high side. I'm not a loan officer, but I'd venture to say if that's your definition of best, then you got it. Like, let's do it. Super shortcut, and I wouldn't necessarily advise to do it that way, but you don't have to have 20% to put down. Mm-hmm. I just started a new job, so I need 2 years of employment history. That's also false. Someone who's a recent student and just graduated and got their first salary job, that's their student schooling history. That's their employment history. We just ask for transcripts to show when they were in school. We get the offer letter. I mean, I've literally had someone fresh out of school. They haven't even received their first paycheck because they've been on their job like 2 weeks, and we closed them on a loan.
Oh, wow.
Yeah. So that's an extreme example, but also extreme reality of what can be done.
Yeah, that's good to know.
Mm-hmm. I'm not a first-time home buyer, so I can get FHA loan. Has nothing to do with being a first-time home buyer. You can do FHA as many times as you buy homes. You just can't have more than one FHA loan. Same thing for VA. I have VA benefits, but I can't use them again. You replenish that every time you sell your home, so you can get as many VA loans as you want. You just may be limited on how many you can have at one time, but that's a myth. You already know I have to sell my current home before buying another home. Our buy before you sell program totally eliminates that statement. I don't have great credit, so I'll get a high rate. I had someone buy a home from one of my builder partners in San Antonio. He was a tattoo artist, and he had like a 630 or 640. He was destined to get some horrible rates. However, I didn't know how lucrative the tattoo industry is. He was putting down like over 300 grand on a $700,000 home.
Wow.
He got a 4.99 interest rate. At the time, that's the promo that we were running. Because of how much he was putting down, it eliminated some of what we call LLPAs, the loan level price adjustments, which in common people terms is like, hey, the lower your scores, the higher the rate, right? Yeah, kind of. But he mitigated how high his rate would have been because he put so much money down. So again, myth that's not really rooted in absolute reality. Relatively speaking, yeah. If you have a 780 score and you're putting 10% down versus someone with a 680, both of them going conventional, yeah, there's going to be a difference in rates. Fed just raised or lowered rates, so the rates went down or they went up immediately, right? I mean, you're going to see that, a lot over this next year. And sometimes you can use that to your advantage because If they want to make a decision before the Fed's announcement, great. I want you to do it too, for sure. But then there's a reality of the day the Fed actually makes their announcement. Hey, United States of America, we've decided to lower the Fed fund rate and we're lowering the rate. So everyone's like, hey, Michael, give me that lower rate. The Fed just lowered their rates today. It's like, not mortgage interest rates, the rates on credit cards, auto loans. It's a different rate matrix. Does it trickle down? Sometimes, eventually, maybe. But quite honestly, sometimes when they lower rates just end up staying the same. And sometimes when they raise rates, sometimes rates actually go a little bit lower. And here's why. Because the markets pack in usually a little bit more than what they think is going to happen on the upside. So when they know, when the whispers become louder and louder, and they're like, yeah, pretty sure I talked to my guy who talked to his guy who's got a guy who works at the Fed, and they're going to definitely raise it in 2 weeks. Well, that word starts permeating in the marketplace. And then you've ever heard like this like financial talk of like, the announcements met the street projections. The street sounds like so like,
Yeah.
city and rugged. No, that's basically just saying, the consensus was that they were going to do this, the assumption, and that's what they did. So it just matched expectations. So if they thought they were going to do a 1/4 point raise in interest rates, the market may have said in advance, hey, if they're going to do a 1/4, then we're going to raise it like a half. Why? So if they come in and actually go, surprise, we raised it a half, we don't get caught with our pants down going, oh my God, I thought it was only a 1/4 and now it's a half. Mm-hmm. So when they actually do the 1/4 raise, they actually end up seeing alleviation in the market and rates come down a little bit. I say all that to say it's really confusing, is it not? Like a little bit. They said they lowered it, and then Michael said that rates stayed the same. They said that they raised it a 1/4, just like they said they were, and rates got lower. It's like, that is logically, I would say pay no attention to when those announcements are, because it's old news by then. Yeah. Those are one of those instances where you're just like, hey, get with my lender. He watches this stuff like a hawk. He'll be able to tell you exactly where we're at, where we were, where we're going to a certain extent, and answer that. Just don't get caught up in those conversations, because like I said, it's kind of like when they said it stays the same, it went up, and when they said it went down, it went up, or when it went up, it went down. It's so confusing.
Right.
But that's because the market anticipates what's going to happen in advance, and they bake it in. I was a student last month, started my job. We already know that's false. My favorite ones. My scores will drop if your lender pulls my credit again after my lender did. That is false. Reason being is they're referring to their consumer scores. So like right now, if Olivia has Credit Karma, do you have Credit Karma? You don't need it.
I actually think I might.
You might have it on some of your credit cards as like a tracking mechanism to like, I can see what my scores are, and have like this little rev thing. It's like, hey, my scores are here. Yeah. Amex has it, and they, Discover has it. That's your consumer scores. Consumer scores are meant for the consumer. It's for you. And it's a lot more reactive and scary, and it says things like all over the place. Mm-hmm. Then you have lenders scoring model. That one's a little bit more chill. It's not as reactive. And it's the lender's report that the lender makes their decisions off of, not the consumer scoring model. Consumer scoring model, once you pull your credit, it's like, oh my God, you pulled credit, doom and devastation. On a lender's report, we go, an inquiry. It's expected. Oh my gosh, 2 inquiries. Okay, that's what people do. They usually have their credit pulled 1 to 2 times, maybe 3 times. But the reality is you can refute that with this, which is from my FICO. It's not Michael Nassifar's opinion. It's not Olivia Maki's opinion. These are the governing bodies that help inform the consumer. And it says in a 45-day window, these inquiries count as 1 inquiry. They're not going to penalize the consumer if they want to shop, see if they can get the best rate.
Right.
So in that 45-day window, it counts as 1 inquiry. those are the most basic myths that I hear kind of thrown around. There's probably another 100, but those are going to be the basic ones that you get asked of the most. Any questions on those?
No, but I will say that that last one is the one that I've seen the most.
Oh yeah, absolutely.
Yeah.
I would. Do you use Outlook
Mm-hmm.
for emails? I would mess around in the signatures and make a signature for the things that you end up dealing with the most. And
Okay.
then just do signature,
Oh.
boom, signature, refer to preferred lender. And then boom, it just automatically writes the whole script. You write the name or something on there. I'll show you here in a second.
Genius idea.
It's the best. It's absolutely the best. And
So
by
smart.
way of reference, I'm going to show you because I am super nerd when it comes to these signatures. So you see my email, you see my inbox, you see new, and let me bring this over here. All right, check it out. This is in reality what I was saying. So I have a client, apply now, buy before you sell, boost, build a marketing funnel, cash to close, clear to close. This is my favorite one to do.
Oh, that's awesome.
My least favorite one to do is this one. Thanks, Jonathan. Your scores are too low. Or Olivia sends me somebody and I want to send them exactly what to do right away. And then I put in, thank my good friend Olivia in Blackstone Homes, right?
Mm-hmm.
And then it guides them along the way. So I would say, for things that you find that you're having to do over and over and over again, just, go and make a new signature. And then you'll have, all the signatures that you would possibly want. Buy before you sell program, like, okay, this is what we'll do for our buy before sell program. So anyhow, super easy. And then you can also do the same thing for on your cell phone. There's a shortcut key, and like I'll put in MEE, and boom, it puts in my whole contact information and email address. And so I can rapid fire send people all the things I need to send or to apply. I put in APPL and then it drops in, verbiage. Thank you for allowing me to serve your lending needs. Your very first step is to do my online application. So I would, in both of those places, Olivia, find the templates that you're finding yourself retyping.
Yeah.
And the speed at which you can guide someone on the next thing that they need to do is how you do higher volume. And you stay consistent in your messaging.
Yeah. That's genius.
No, I'm glad that you got something out of that. That's awesome.
Yeah.
So, and I can show you how to do some of those things if and when you want. Are you Android or are you iPhone?
Oh, Apple all the way.
I was about to hit stop on the call. I was like, if our phones turn green, I don't know if we can be friends when I'm sending you a message.
Yeah, no, that's how both my parents have been Android users for.
Yes, your mom is.
I don't know. And her excuse is that she can open spreadsheets. I'm like, I can do that on my iPhone
I can look
too.
on spreadsheets. It's a horrible excuse, April.
Yeah. Yeah.
If she ever watches this, that's a horrible excuse. Okay, so now we're on the mortgage loan process timelines. I won't take up too much of your time on this, but just so you understand, most everyone can do an online application. It's super easy. And I would say you probably want the vast majority of your buyers to do one of those before you get in the nitty gritty, before you write the contract. I mean, my joke is always ready, fire, aim. Y'all hunt in your family. That's not a good sequence.
Yeah.
That does not work. Ready, aim, fire. All right. What do we do when we're aiming? We're getting our pre-approval. We're getting our expectations set, cash out of pocket, monthly payments, sales price range. All right. We're setting all the right expectations. And so there's still realtors that take people all around town to look at homes and they haven't gotten pre-approved. I always find that so bizarre. It's like, you have no idea that this person doesn't have a job. You have no idea the person had a 400 credit score.
Mm-hmm.
You had no idea this person wanted a $1,500 payment and you're showing them $400,000 homes.
Yeah.
Okay. Online application, then, we're able to do our upfront underwrite as long as they upload their financials, which means like we're reviewing income, we're reviewing credit, employment history. And, honestly, if those things are done correct up front, Olivia, these loans, they freaking fly through the system. It's when people just go, so tell me how much you make. I make $100,000 a month. Okay, how long have you been at your job? Shoot, I just started. 3 years. Now, again, do most people do that? No, but if you don't validate and go, hey, let me contact the employer to do a verification of employment. Hey, it says you've been there 1 month. Okay, if you don't verify the pay stubs, let me look at Olivia's pay stub. 100,000 a month? No, she's making like, 10,000 a month. Oh, I see what she did. She put the annual as monthly. You know what I mean? So as long as you validate some of these seemingly easy things that we're talking about, which is much more difficult in reality, but if you validate those things up front, then it's just appraisal and title and disclosures and rate lock, the easy stuff, really.
Mm-hmm.
And then the final steps after, the upfront underwrite, the formal underwriting would be just finishing out the conditions to get the clear to close. Okay. And we can go into that more streamlined, more in depth, later if you want to know like the nitty gritty.
Mm-hmm.
The mortgage glossary. These are just some of the basics that you'll get exposed to. I'd say, the main ones that you're going to hear is, DTI. You already know what DTI is?
Yeah, the debt to income.
Yep, debt to income. LTV, you may not hear it as often, but loan to value. That's just fancy for how much down payment. Are you putting 10% down? Okay, great. Then you have a 90% loan to value. Okay. AUS, automated underwriting system. That's fancy for, did the computer give it a thumbs up or a thumbs down? So most lenders are going to want at a minimum to have their automated underwriting approve it, and then they proceed to the next steps of conditions and supplying to underwriting. PITI is not the word pity. It's principal, interest, taxes, and insurance. That's the whole enchilada. Some builders literally market just the principal and interest. Like, yep, your payment is $800 a month.
Wow.
Okay, but wait, there's taxes and insurance? Yeah, but just your mortgage is $800. Well, what is it, taxes, insurance? About $2,000. Damn, that's a big difference, right?
Yeah.
Okay, so typically your buyers and your realtor should be asking, yeah, I want to, is that the PITI? Is that the full payment? Is that with taxes and insurance? You say, yeah, that's the PITI. You know what an appraisal is. Going to the next page, final inspection. So because you work in new construction, if a lender's doing their job right and they order the appraisal on a home that was a to be built, they should get the appraisal back 2 to 4 weeks before the close date. Well, the home's not done. Well, of course it's not done. The close date's much further out. But we want to get as much done on the front end as possible. So I'll order the appraisal well in advance, and then I have to get a final inspection later. So lenders, builders lenders, they should, disclose a final inspection fee. Because if you wait to order the appraisal when the home's done, shoot, I don't know how Blackstone goes, but I know a lot of builders, the home's not done until the day of closing when they're doing their final walk, right?
Yes.
So you can't wait until the very end.
Mm-hmm.
Homeowners insurance, that's like Allstate, State Farm, Farmers, right? That protects the home buyer against, fire, for example. Mortgage insurance, that protects the lender when someone puts less than 20% down. Seller paid costs is just that, seller paying costs. Sales price, loan amount, down payment, that's easy. Loan types, we went over that earlier, but conventional FHA, VA, USDA, jumbo, non-QM, and portfolio. All right, this is kind of the more boring stuff. The next stuff, any questions on that section that we just went over? Okay. Now we're into this stuff called TRID, the TILA RESPA integrated disclosures. This used to not be a thing, but then with the mortgage meltdown and with reform happening in our industry, the government stepped in and like, horrible lenders, we're going to fix this. We're going to fix this. And so they incorporated all these new acronyms and terms to make the process slower. Like literally, we want to make the process slower. Why? Because a slower process is a more informed consumer. A more informed consumer is a better consumer. And so realistically, loan estimate is an LE that's issued upfront with the disclosures. That's going to be the more official payment versus just like your off the cuff estimate that your lenders will send. Like, hey, I got a buyer. They want to put 20% down. What would be the payments beyond that, right? And then the other important one is the ICD, and that needs to be signed 3 days before the close date. So if you're closing on Friday, Wednesday, Thursday, Friday, it needs to go out Tuesday. Tuesday, it's issued. Wednesday, Thursday, they've waited 3 days. They can sign on the fourth day. Okay. So your best lenders are not going to wait for some random reason to send it on Tuesday for a Friday closing. Your best lenders are going to send it like a week in advance or 2 weeks in advance. But when they issue that ICD, that means they're obligated to the fees of which they disclosed. So they can't go back and be like, oh, sorry, I forgot about this $1,000 fee on the lender's fees. So that's why that's super important. And some companies are super conservative on when they say. Just the ICD is kind of what you need to know. And you know what? Side note, I can help make a list that you can send to any lender and say, hey, I don't require a lot of attention, but if you could adhere to this list and just fill it out when these milestones are met and email it to me, I'd appreciate you tremendously. That way, you don't have to be a pain in their side or have to recreate the wheel. But as long as you can track those things, you're going to know that the closing is going to make it on time.
Yeah, that would be great because I'm really not involved in any of my buyers so far throughout the loan process. So I have no idea what's going on.
And, that's a common thing. There's a lot of people who've been doing this forever and they still don't know what's going on. But I'm going to put it on you to remind me because I have a lot of great ideas and I offer a lot of great help, but I don't follow through because I forget. So
okay, I'll bug you about it.
I am enlisting you to keep me accountable. Just say OSL mortgage sheet. OSL mortgage sheet.
Okay.
And then I'll make that because I think that'd be helpful for you to be able to use.
Oh, yeah, absolutely.
Yeah. Final CD is just the final closing disclosure. That's just like here's all the final numbers. This is what you can expect at closing. This is how much you need to bring to the closing table. That's just the finalized everything. There's no more estimates on the final CD. All right. This is actually one of my more favorite parts. Now, you don't have a preferred lender, but you guys have preferred people that you prefer to work with, right? Yeah. So you kind of do have a preferred lender. And the reason for that, so here's what the industry and realtors and buyers think. Here's what they think of your mom in Brightland Mortgage. They're trying to take advantage of me. They're trying to sell me higher rates and fees, and they want to just make a buttload of money. That's why the builders have preferred lenders. That's not the truth. That's just what the realtors will fume and spew because they want to use their lender because it's kind of like a power thing. Like, I want to use my people, Yeah. That's not the truth. The reality is, whether you're a small company like Blackstone or you're a large public company like Meritage, it's ridiculously capital intensive to build a home. And when buyers are not providing the interim construction loan, somebody is. It's Olivia's boss's boss's boss, It's April Mackie's boss's boss's boss. And based on the scale of the company, you're talking billions of dollars being borrowed and coming in and going out, coming in and going out. When they have to make their numbers, the builder, they're counting on those closings to redeploy that capital back out to the next developer, to the next realtor, to the next vendor, to buy more dirt. It's this constant cycle of capital in, capital out, capital in, capital out. Do you think a company like Brightland could function if they had no preferred lender and they used, what do they close, like 40, 50 homes a month?
Yeah, something like that.
Could you imagine 40 to
No.
50 different knucklehead loan officers like us, like all over the place, like freaking an ant pile? Oh, Linda already loses her mind as it is, and the majority of them are with Brightland and with CMG or whatever. Like Linda she'd have, bless her heart, she would have a heart attack. It wouldn't work for her. So the reality is for what I've listed here: transparency, superior service, predictable results, on-time closing, specialized services, buyer protection. Like if the buyer thinks they're getting 5% on a 30-year fix and they show up at the closing table and it's a 3-2-1, then it's all blown to you know what. It's like you have no protection. But I know my realtors work with this guy like one time before. She knows him really, really well. Okay, well, you really don't have the same protection because my preferred mortgage company, I'm acting like I'm the builder, like they adhere to what we say or they get fired. And they will perform. You will get what you're promised. Efficient communication too. Again, you're Brightland and you're closing 50 homes a month. You can't call 50 different loan officers. You contact 2 and you get 45 updates, and then you go and contact the other 5 and get those 5 updates, right? So it's efficient. Now, the bigger reason for that is straight up like the enterprise as a whole, the economics involved. Like we talked about it a little bit on like the carry cost of like the predictability of the closings. If you have 100 homes that slip a month and they have to pay 1 extra day of carry cost, I mean, at an average of $200 a day in 100 homes, do you think that any builders go on a front, $20,000 in carry cost because homes just.
Yeah.
And so, okay, so when that happens, where does that money go? Does Brightland just go, crap, we just lost $20,000? They go, nope, we need to carry that into our to-be-builts and we need to now recoup that. Hey, sales team, I know that we were given free sod and sprinkler, but that's no more for the foreseeable future until we get ahead of some of the losses. So it ends up costing the consumer more money. The on-sites have less incentives. They have less benefits. Overall, the costs go up. That's just carry cost. What if some knucklehead kids who are rushing whatever fraternity in A&M and one of their things is to come back with an AC unit? I know it sounds stupid, but like, hey,
that's funny.
You pledges, you better come back with an AC unit or y'all are all doing wall sits and keg stands till the sun comes up. I'm not saying that happened to me, but I've heard it's happened.
Yeah, it sounds a little personal.
Yeah, I know, right? So the reality is like they go and vandalize a house and they steal things. Not the college kids, but whoever, desperate people. And again, same result, different story. Who ends up paying for that? The builder. But who really ends up paying for that? The buyers. That's a lot to give you lots of ammunition on why you use the preferred lender.
Yeah. So for example, we have 3 specs right now that, well, maybe 2 of them have had a birthday. So they've been sitting.
Ooh, that is, Olivia, that's bad.
Why do you think I'm here? I need some good incentives. I need somebody to speak to the builder. They, small builder, they used to be custom, and not much belief in marketing or in. To be fair, our operations manager, bless his heart, he does all he can, but he's didn't come from the builder world. And so they haven't really ever done such incentives. So, and my direct competitor in my neighborhood is Brightland.
Oh my God.
Yeah.
Can you want to partner and do some stuff to make your mom's head spin?
Okay, well, to be fair, it's with the Houston division.
Oh, well, great. And we don't care about the Houston guy. Who is the Houston
Yeah.
guy? Is it
I
Tucker?
have
No,
no idea. I have no
that's
idea.
fine. Even better, because I'd never. But I mean,
That
it
would
would be
be fun.
fun to see your mom be like, "Honey, what are you doing? Don't do that to me." But like the reality is like there's some really cool things we do. So right under email Michael OSL thing,
Mhm.
um, give me your oldest specs. You said you had two that had a birthday,
Mhm.
and give me whatever the list price is, and we're gonna make those things be sound super sexy. Like there, people are gonna be like, I need to know what's going on with that. Like,
Yeah.
how can you do that? How can you make the payment like that? How can you offer something like that?
Yeah, no, that would be great. And I love to sell specs and but I don't have the resources. That's why I am
You're gonna
talking to
create.
you
You're
and
gonna create the
reaching out.
resources.
Yeah.
I'm about to ditch the rest of the stuff we're having, and
Yeah.
you're gonna sell one of those homes before the end of the month. So
Yeah.
here's the reality.
Great.
You have to create your own resources, and you can.
Mhm.
You've ever so lightly started doing some stuff in social media.
Mhm.
You need to do more and talk about specifics.
Mhm.
You've done really, really great because you've started, which I love. I'm not a creep, but I love watching friends and their kids and seeing them like do their professional endeavors. It's like, oh, I hope my kids can do some of this stuff, you know. But the reality is you started really well, like introducing yourself, right? This is who I
Mhm.
am. This is this before you start getting into Uber sales mode. Okay,
Yes. Yeah.
but what you could start doing, and this is a two, maybe three-step process, is
Okay.
showcasing these homes, creating the sense of urgency by I'm getting, a lot of inquiries on my current inventory. People are understanding that we have a new person in office or a repeat of the previous, and they know what happened last time, we had him in office. The economy grew. This is not a political thing. Don't send me your comments and suggestions about blue pill and red pill and that. I'm just stating facts. So keep that stuff out of this. But the reality is, I'm getting a lot of interest in these properties, and I want to make sure you guys know about it because, if you don't know, you could lose out. And on this specific home, we're running a promotion right now where we can do a 4.99 fixed. Guys, the average interest rate is 7%. On this home, it's saving you $400 a month. Or
Mhm.
to put it in different terms, that's the difference in about $75,000 to $100,000 on home price. So you
Mhm.
could go buy a resale around the corner for 300, or you can buy this home at 375 and have the exact same payment that you would on a 300,000 house. Like I think stuff like that is powerful, and you run it about 90 seconds or less. And I don't know if you're using CapCut or doing some other things, but you can put in place the the jazz hands. You can put in like the payment and the cash out of pocket and the interest rate, and then just put together every month, four of those videos that you deploy on a weekly basis. Okay, that's only the first step. The second step, and this is the way more important one, you've got to have a community of people who also hang out online with you that are your cheerleaders, that go and comment and like and share. And I can't believe I'm telling you this because I know you know more about social media than I do. But what you're doing is you're creating superficial interest in your post.
Mhm. And
You're
then it dilutes
faking,
it. Yeah.
you're faking its popularity.
Mhm.
So I don't know how many girlfriends and guy friends that you have or how many people on social media in your company,
Mhm.
but you literally need to create a group of friends. Hope and maybe they're all in the same industry, and
Mhm.
say you guys have a text group or you have a message group within the app that you're using, And as soon as as soon as see, you remind me of April so much.
It happens all the time.
As soon as Olivia puts up the bat sign of like, my post is going up, I need y'all to boost it.
Mm-hmm.
They go on there and it's like a minimum of like 4 to 5 words and 1 emoji. And if you really love me, you'll share it. Because, making me look better doesn't make you look worse. Like, we're all in this together. So you're pumping up the post, and then it starts reaching, like Instagram goes, I don't know what Olivia's doing, but it's kind of popular. Let's put this on 10 feeds. Let's put this on 40 feeds. Let's put this on 100 feeds. That's a big ask, but I'm sure you're social and you have a lot more friends than I do. You could probably
My mom
enlist
is
me.
my number one supporter. She's always the first.
She does awesome, but like, look, well, you got 2 people right there. You know what I mean? And you got your dad and you've got siblings, right?
Yep, lots of them.
Seriously, put together a group and then I'll invite like 1 or 2 other people. Because look, like the people that I would invite, they're not in your market in College Station. So like, it doesn't hurt them to support you.
Yeah, exactly. Yeah.
Dude, support me. You're selling homes in freaking Abilene.
Yeah.
We couldn't be further apart from each other,
Yeah.
And so do that and continue to shamelessly and confidently, and just like you're talking to your friend. It's taken me a while to get comfortable and I'm still not entirely too comfortable, but I have someone that's helping me with my social media. I'd love for you to follow and comment and see some of the things I'm doing. And don't take this the wrong way, but you're much younger than I am. And so I would like to know, does this appeal to you or not? Does it help give you information that you'd want to get more or not? So like, not to give you more work to do, but I have someone that I'm paying. She's awesome. Her name's Morgan. She's between our ages. She's phenomenal. She's really,
really?
Yeah, she does all my social media stuff.
So that's the other thing too, is I am also literally the Blackstone, none of them have social media.
I know. I tried to already find stuff on you guys, and it's like freaking black hole.
Yes, black hole, and I basically am now like the social media manager. And so I do my social media and Blackstone's, and I'm really like trying to get them to realize how much growth that they could have if they hired somebody to even just do part-time for their social media, because what I'm doing for the Blackstone accounts isn't really helping me in my sales, whereas my personal sales accounts are me growing my personal relationships with the realtors, and I get to highlight with my face on selling my specs kind of thing. So it's times 2 essentially. But
maybe I could work something out with my social media person and I cover the expense, and it's not doing it to get business, but if we end up working together, then it's just compliant. I'm not doing it for that. But if I can get her to dovetail and do some things, then you're not paying anything and your social media starts to do more because she works with realtors and lenders specifically. You don't have to reinvent the wheel. I'll look at that on the side and just see what she says about it, because I think then that's proof of concept. You're like, look, I'm doing this with like minimal to no budget. And if you guys do this, do they have a realtor following?
so that's the other thing too. In Bryan College Station, local builders, which we thankfully happen to be a local builder. It's like a freaking world, like Real Housewives show. I don't even know. So basically, majority of the local realtors in Bryan College Station have a horrible history of cutting realtors out of deals, except for Blackstone, thankfully. But then they also, so each real set of realtors have their own builders that they go to. And then historically, big production builders like Guillen Homes at one point, David Weekley, DR Horton finally stuck, but all of those big production builders have been pushed out of Bryan College Station. Brightland is finally back in. DR Horton has stuck. So it is a very tricky market. So we don't have like the best realtor following, but that's why I am I'm hosting these construction workshops for realtors once or twice a month. And that's
Mhm.
very niche. And for like all of these realtors to get something out of it too. So where they get to learn more about like new home construction, hosting realtor events and all of that. So I'm kind of, oh, I also got a builder boost started for Bryan College Station because that was not
Nice.
a thing.
Yep.
So I'm trying to grow that, but
Is
that
that
is,
with Kim Gully?
yeah, and Matt.
Yep, that's awesome. Good,
Yeah.
good.
Got that started over here, but it has been a slow process. So every single time that I host one of those construction workshops, that gives me an opportunity to get in front of them, and then they're intrigued and then they join it. But getting the other builders on it is like, it is
Don't
a
get
very,
other builders on it. I would keep it proprietary just to yourself.
I know, and that's what this other guy that does like the construction training for these events, he likes to preface that it isn't just for me. I mean, these realtors need to see how other realtors are making a living off of just this one Facebook group chat.
Mhm.
And other builders could be on it, but it's a little difficult out here for sure.
Well, you're doing all the right things because just like how I am like a giver of education and material and I get it in return. You're
Mhm.
doing the same thing, like provide these realtors, these workshops. The same thing that we're doing, I'll make it a more shorter, condensed version. And if you want to do it in person, I joke, I have my wife's car. I'll drive it there. It won't say horns on it. But I could come there and do it in person, or just to kind of make it easy to get a lot more people to participate, just
Mhm.
host a Zoom and say, hey, we're doing a realtor workshop. Do you ever feel like you don't really know all the terminology of what builders offer for financing incentives? We're here to educate you and have more information so you can better serve your clients in the marketplace.
Yeah.
And it's not about me, it's about y'all. And then
Mhm.
that would be, hey, these are the incentives that we supply. This is the reality of how they look. This is the benefit of a 3-2-1. These are
Mhm.
the pros and the cons. This is a permanent rate buy down. This is how it relates to the long-term outlook of what a client does and how you can better serve them. If you're buying from DR Horton or somebody else, now you know better. Our
Mhm.
goal is to help educate you, and people tend to work with those who take care of them and educate them the most. So
Mhm.
I think that's a great tactic. But don't sleep on the getting together your army of boosters. Okay.
I will do
E-
that.
Even if you only start out with like 3 or 4 people, you'll be surprised. Your mom will enlist some people. I'll enlist some people. And it doesn't matter. It doesn't matter who's commenting. The reality is, a lot of salespeople haven't seen anyone take advantage of this in new home sales. They'll just go and employ some offshore company with all these bots, and they'll have all these comments, and all their stuff bubbles up to the top.
Yeah.
So, man, I'm totally like, that's the stuff that, like, don't get me wrong. I like doing all this stuff that we're doing,
Yeah.
but like making sales and doing that's like where I really like the most. I think we might kind of be close to done. Issues with outside lenders, you already know that. The
Mhm.
people involved, like that's just a read as you go. Um, the tools to help you sell, we kind of already did a little bit of that. I'm going to stop this sharing thing here. Not to say that there's not more stuff on there, but some of that stuff, like you're studious and smart. You can read that. I would like to say, like, within the mortgage 101 stuff, even though we skipped kind of half of all the filler stuff, what kind of questions did any of what we went over come to mind, or questions that on topics that we didn't cover come to mind?
Um, well, this is something that came up with I have a coworker, she's a part-time sales, but she had somebody ask about reverse mortgage. Do y'all do reverse mortgages?
I just got my mom clear to close on a reverse mortgage. She's moving walking distance from my house from Arlington. So she's going to be
Wow.
able to enjoy her babies. And yes, so quick shot of ears. Well, you can't see it, but there's my son right there. Our
Oh,
two fake dogs, Pearl, the completely deaf Frenchie, and
oh,
Winston, who acts like he's completely deaf and he's not deaf at all. And then
that's so
baby
funny.
girl, like my daughter Layla, my wife Jeannie,
Oh,
and this ugly guy that really lucked out with a beautiful
whatever. That's
daughter.
um.
That's our most recent family picture. I think before that was probably like a 5-year gap. But
Oh, well, you have a beautiful
yes,
family.
thank you. Reverse is huge, Olivia. Huge.
Yeah, and I was not familiar with it. And so basically this prospect, she um is buying in cash, but she's worried about taxes. And so I call my mom for everything. I mean,
She probably
Blackstone.
didn't know enough about it, did she?
Well, she doesn't really see that often, like in Austin, I guess. And she's so far removed from sales now, so she was just like, oh well, you can ask Michelle.
She
um
doesn't know about it either.
but and to be fair, like, I Michelle is amazing, but she is a busy woman. And
Yeah,
I almost feel bad bugging her. And and like, I'm learning a lot right now, but Michelle has done amazing things for me and done a lot for me too, but I know she doesn't have the time to sit and like teach me through.
that's not even, you're right in not wasting her time because she can't teach you, nor can I. You
Mhm,
really need a third party invited to the
mhm.
conversation. So I'm drafting an email to Harlan. He heads up our reverse department. I think we're like usually number one, number two in the nation in reverse loans. And I
Okay.
just got through doing it, reverse loan with my mom. She has no mortgage payments. She kept her current home and she increased her buying power. So they'll explain it to you, and there's a website that they even have. But I think it'd be better for you to dedicate, a good 30-minute call, and I'll put that in the email so that you can get the knowledge on reverse mortgages,
Mhm.
and you're going to open up a whole new level buyer profile that nobody in new home sales, other than those who are working in adult active communities. Well, of
Mhm.
course, you can do a lot of reverse mortgages because you're in a community that's all that they're wanting to do, subject to you telling them. You get to do both, get to do your regular everyday deals, and now open this up. And I tell
Right.
you what, like veterans, like African American buyers, Indian buyers, Asian descent buyers, they have old people have like huge groups of people that they talk to. They don't got anything else to do. They'll just
Mhm.
talk about it. My mom like already enlisted like two other friends that are looking at moving into New Braunfels in Austin to do reverse mortgages because she's like,
Wow.
this is phenomenal. She was able to buy about 20% more home than she thought because the reverse mortgage, the way it approves. I'm not going to mess it up and try to explain it.
Okay.
Just know that typically it sounds like this, Olivia. I own a home that I own free and clear, and it's worth 400. And by the time I net my funds, maybe I have 375. Your home is 500, and I need to pay cash because of X, Y, and Z and whatever. And they're going to be shocked to go, okay, sell your home, and you can actually get 550 and get every single bell and whistle to live out the remainder of hopefully another 50 years,
Mhm.
but you're 65, so let's say it's probably 20, and have the home that you've always wanted and still be able to leave a legacy investment to your children. And here's
Mhm.
how we're going to do it. That's such a powerful sale. And that's the most common situation. I don't have enough equity in my home to pay cash for the new home. And
So that might be like a myth that you can bust, is so when people hear a reverse mortgage, they think, well, does that mean that they technically won't own their home anymore when they buy a new one and they're
they still
using
own
it?
it. They
Yeah.
still own it. The mortgage is done in reverse. So part of the appreciation pays for the loan and it's tacked on to the loan. And then if it reaches its maturity term or the person passes, the, what do you call it? The beneficiaries, the heirs, they have the ability to refinance the property, sell the home, and have like 90 days plus extensions to do what they want with the home and get the remaining equity out. It
Okay,
doesn't go
that's
into probate, all this crazy stuff. And the owner has no monthly payment and they didn't have to deplete all their cash reserves. Meaning, in what they think is a perfect scenario, I have 500,000 equity in this house and the new home's 450, or the new home's 550 and I have 100,000 on the sideline. I'm gonna go pay cash with my 100,000 on the sideline and my equity from the home. And guess what? Now grandma and grandpa can't do certain things. They can't go on vacation. They can't pay for the gas. Why? Because they have no disposable money. They have no liquid assets. In this scenario, they keep the 100,000 they have on the sideline. They use the majority of the equity that they have. They get in the property and they get to still live like a meaningful, fulfilled, life for the rest of the time while they're alive and in this home. So
exactly.
I'll send the email right now so that you and Harlan can set up some time. And don't feel like you're going to have to be responsible for selling it. I just want you to know, like, two things, really. I'm going to be straightforward with you. That you have a resource that you can trust. That you can literally be like, hey, Michael, you're super old and you need a reverse mortgage. I have a partner. That's all that they do. They've helped hundreds of people in new construction and resale alike. I want to set up a time for you two to meet so that he can discuss all the ins and outs of the reverse. It doesn't get any easier than that. You don't have to sell it.
Okay, that's great. Yeah, because that's exact scenario. This lady, she is wanting to move down closer to her daughter. Our homes are at her highest point of her budget, so she doesn't want to, be pinched every month. So exactly, yeah, I'll have to send that over to my sales partner because she, I think, might have shut it down, and she just started in new home sales as well. So she's bought homes before, but she hasn't been dealing with. We're both new to this, and so I think she might have shut it down when she talked to somebody, and they kind of said, "Yeah, but then that means that they necessarily don't really own their home anymore." So I don't
No,
know if,
they still own their home. They
yeah,
still leave equity and legacy to the children. Now, some people be like, yeah, but then it accrued all this money and now they don't have the equity in it. Well, dum, they didn't spend all the assets they had in the bank either. So, like, one
yeah,
way or the other, they're going to spend money while they're still alive.
mhm,
I'm saying from the selfish heir standpoint, like,
yeah,
no, they still get to accomplish it. The home still appreciates and they still have equity in the property.
mhm,
There's no negative. I know it sounds like a double negative, but there's no negative outcome of doing this that like puts them in a worse situation.
yeah,
It like accomplishes so much more than just getting into the home. It provides them the path of retirement and a high quality of life for the things that they need and want. They want to live close to their family. It's the exact same thing my mom wanted. I had to start this conversation with her in November. And
mm.
that's how fast she was. You find a house and I'll move there. And
Oh,
so I went and found the closest house I could find. And it's a 3-bedroom, 2-bath in a like a it's kind of like a courtyard community. They're deemed condos, but they're single family residents.
mhm,
And it's perfect. It's beautiful. She loves it, and she accomplished everything she wanted, and she still got a buttload of money on the sidelines that she can still do all the things she wants to do. Go on her cruises. She wants to take us on African safari. She wants to do all these things. She still has the money to live however way she wants to live. So,
yeah, that's
yeah,
awesome. Okay,
I'll
good
do
to know.
this. Yeah, I'll do this email interview introduction, and then you guys can take it from there. Just you can you can talk to Harlan like he's an instant friend. Trust me. Once you after hello, you're like, oh my gosh, he's like such the cutest, nicest, older man, like to be able to help and do. He's perfect for the job because he's so patient, and he's done a reverse mortgage for himself when he purchased. Like he's not just talking about it; he's done
Yeah.
it.
Okay, that's
So,
great.
so
Yeah.
that was good. You had the reverse question, got you covered. That can't be the only question. I challenge you to stump me. So far, you're 0 for 1.
Oh, um, so these specs that we're trying to sell, the one that is the oldest in my neighborhood. So this neighborhood started before I got over here. They didn't even have a sales representative here. So it's really I the house is older than my time here. So
Mhm.
I've already sold one spec in this neighborhood. Majority have been to be built, and the house is perfect. When I send you the address and the price, it's going to be
Mhm.
like, well, why is this still standing? My direct competitor is Brightland Homes, and I have lost um, one or two deals on specs because the guy next door, he can drop their sales price 60K, and he can also get
Mm.
an insanely low interest rate. I do not have that bandwidth. And
Mhm.
the houses are beautiful, my specifications are higher, very beautiful homes, but the people that I'm seeing and come into my neighborhood over here, it's young families. The ones that are really interested in specs are young families. I most of the time the older people are wanting to do to be builts, but it's the younger families just getting started that are interested in the quick move-ins.
Mhm.
And so I am stumped with this one home that has been sitting for a while, and I've tried to do, 2-1 buy downs. It's also like my marketing, I got to tap into that. But how can you help me with that one?
So I think it's a matter of putting a lot of lines out in the water to find out, because you're going to have 5 different people, right?
Yeah.
One person is going to fall in love with some promotional interest rate and they're not paying attention to cash to close. The
Mhm.
other person is going to fall in love with a payment and they're not paying attention to cash to close or interest rate.
Right.
Another person is going to fall in love with the fact that you talked about buy before you sell. And they're like, I can actually have that home and I don't have to worry about my current home.
Mhm.
Um, Another person is, a realtor, thinking a realtor bonus is what will really drive them to go and sell this home, because wow, like you're going to get 4% or 5%. And maybe you don't give the same incentives, but that's a conversation to have with the realtor. Like, look, I had a total of 4 points to give and I gave you an extra two. If you tell me that this buyer needs 3 points, give one of your points over. Like, I already put my best foot forward.
Yeah.
Right. So I think it's a matter of, I mean, how many different lines can you put in the water
Yeah.
and to get someone to bite? And all that happens with just some premeditated, thought out, marketing. And there's no better marketing right now than just doing the social media. Now, if
Right.
you want to take it to the next level, you do the social media, you do some print flyers, and then you go and you plaster the builder broker offices, you hold lunch and learns, you
Mhm.
hold, hey, I'm doing a community tour of our current inventory and we're going to showcase, 3 homes. And for the realtors that are here partaking in it, I have approved extra 1%. Or when you register to do this, I have a free upgrade incentive for your buyers and an incentive for you. And so it's just a matter of just getting active and getting visible. Like, you
Mhm.
could have the best thing in the world, and if nobody knows about it, you're waiting for someone to discover you. So, I
Mhm.
think your approach to social media is spot on. But let's see what incentives we can create. My ask of you is, property address, any, the best 2 or 3 pictures you have of the property,
Okay.
and then the price that you can offer it at, along with the incentives you can offer at that price. Now, that's a bold ask, and here's why. I want to know the depth of what you can do. Not because I want to go to that bottom line, but that way I know what we can play with and what you can still hold back. Because if you tell me we have 50,000, I say, okay,
Mhm.
great, Olivia, we're only going to use 30. We're going to hold 20 for negotiations.
Yeah.
And so there's a lot of trust that comes with that. But I'll tell you, the more you inform me, then the better I can counsel you on something that may be, super exciting and interesting to get clicks. But some builders are like, I don't know this guy. Why would I tell him my bottom line and this, that? I'm like, okay, well, maybe because I
Yeah.
could possibly help you. I don't know. You just try it.
Well, you're gonna
Worst
die
case, you sell it.
next.
Uh-huh.
Basically, I don't have a sales manager, so it's literally like me my operations manager who does everything, and then the presidents. Super, super small company.
That's great though. Then doesn't require like all this bureaucratic trying to turn the Titanic, you know?
Yes,
Um,
exactly. And I will say that I have felt very comfortable coming in here, and they're I'm making them do all these things that, they weren't doing before, and they're going with it and they're trusting it, which is great. I'm glad that they are considering it. I get a lot of ideas from my mom, but
mhm.
the hardest thing is incentives and pricing. So I will try and find the bottom line for this house. Um,
Yeah.
incentives, no, again, not something that they normally do. My max incentive is $10,000.
So let's just play a game of pretend. If for round numbers they say, hey, the bottom line on this home is 500. Okay. And you have 10,000 at 500. Okay. What I would like to know is what would that home appraise and sell for? And it needs to appraise. We can't just say, well, we could, I don't know, we'll sell it at 600. Like, what do you like? Yeah, but would it appraise at 600? Are there comps that show that? So maybe the bottom line is 500 with 10,000. And you're like, Michael, I have comps that could justify 530.
Mm-hmm.
Okay. I know their heads are going to pop off their shoulders, but let's list it then at 530 with $40,000 of play money,
Mm-hmm.
right? Instead of taking it all off the top and having nothing exciting to talk about,
Mm-hmm.
keep it in the price and have something exciting to talk about.
Yeah.
I'll share something with you that I think is really unique and it encompasses exactly what we're talking about, and I'll email it to you. But your ask of them is, what's the bottom line price? What's the incentives? But also, what's the max this home could sell and appraise for?
Mm-hmm.
Okay. And you're saying, hey, I'm not asking you to take a haircut. Whatever we can sell it for at that max price and give away in incentives is what we're trying to do. And the reason for that, quite simply, and you can provide them this, I'll turn it around and show you here in a second,
Okay.
um, is the buying power of these rate incentives that you can do versus
Mm-hmm.
price reduction. I did this for another builder, and they're like, this was a friend of mine that I do coaching on the side within our company. Um, and so I do some of these things to show them the difference in, rate comparisons. And this isn't the exact one, but this will work. And I'll send this to you if you'd like to use it as well. All right, you see something that's got a lot of numbers. The one I have is way more simplified than this, but I want you to see this one here. Okay, right? All right, so we have a home at 600,000. We have a home at 463.
Mm-hmm.
And what we want to do is show how can we get this payment equal to this payment, okay? And so right now this is much lower, so let's go to, oh wow, pretty darn close. So even if we're just looking at FHA,
Mm-hmm.
look at the difference um, in buying power if we go to 520. We're starting to get closer. Was it 525? Was it? And I just didn't realize it. Oh, there we go. Close. It's probably like 523.
Mm-hmm.
So something like that, where essentially we're going, hey, you can get standard market at 6.8% and buy a $520,000 home, or you can get 80,000 more. And I'll clean this up, but just look, if we offered them 4.99, I mean, they're getting 80,000 more dollars in house at the same payment.
Mm-hmm.
And that's just going versus a price reduction and an incentive collaboration. Like where it doesn't take 80,000 to do magic with, but you see my point, how vast that divide is between price reduction and an incentive on the interest rate. And yeah,
Yeah.
you really could do 4.99. That's not a pie in the sky. It costs a lot of money, but
Mm-hmm.
again, we're creating that incentive. If it costs 30,000 and your baseline is 500 and you've got 10,000 at 500, and let's say it costs 30,000. Okay, great. Take it to 530 and you're going to be able to offer them 4.99. And that buyer is going to say, you mean to tell me I can get the same payment on a $600,000 home with you versus a 520 somewhere else? Yeah.
Yeah. Yeah. And I find that obviously, like realtors, they're okay with hearing, the overall price. But whenever I'm actually talking to buyers, it's more important to advertise the monthly payments. And
I think having this little tool that I have, we can pre-format it so that it has your community tax rate, standard market versus stuff that we know we can facilitate. And that way you can truthfully and honestly go, hey, this is the value that we bring with our incentives. I know you said you're looking at homes that are 500, but in our homes at 530, but I'm offering you payments that would equate to a 475 home at 530. We actually have a lower payment than your 490 resales at 530 brand new. Like, I'm giving you the buying power that you think you need. Because quite honestly, Mr. and Miss Realtor, you're not a loan officer. I'm not a loan officer. Your buyer's not a loan officer. But using the tools that we have in the market that we're in right now that we need to be successful, like, we can make it happen. But you need to get outside of the barriers that you're creating and or that your buyer's giving you, because you're building it on false pretense. So yeah, I'll give you a couple of these things that I think are helpful. That one is like a really good one, I think, because and like I said, I'll make it cleaner and more condensed because there's just too much going on there. But at least that one does give you FHA, conventional 10%, conventional 20%, and VA. And that encompasses probably 95% of your buyer profile.
Yeah. And I think trying to convince them, like I said, the guy who I get approval for like my money, pricing, incentives, all of that, not super well versed in like what, and historically College Station has always been behind on what Houston and Austin and Dallas are doing. But I think they have appreciated everything that I've done for them, and I feel lucky to have the connections with a bigger market like Austin and bringing that to Blackstone. Because instead of, lowering the sales price, which they only took one price reduction on this home, but instead of lowering the sales price, which they never actually really want to do, is getting that in more incentive money. So I think that is one of my goals to do for that spec.
Yeah, well, again, I don't want to sound arrogant to the buyer profile of College Station, but I think you get to take advantage of a lot of the tools that are working in a more sophisticated market by people who are like, they're going to be enamored with it. I think they're going to be really like wowed with, but you got to get them to overcome their stigma of, I just know that my buyer needs to be at 490. It's like, no, they really don't. Like, your buyer needs to be at 490 at a 7% interest rate, but they can be at 550 at my 4.99 rate.
Yeah.
And here's the apples to apples comparison. If you don't believe me, this is straight math. This is not, we're not sipping on cappuccinos with our, turtleneck theorizing on things. This is just straight math, straight up. It's easy. And so it will take that level, but you got a lot of work ahead of you, but like, it's really, really cool because these are all things that you can do. There's nothing stopping you from doing a quick video, jazzing it up a little bit and say, do you know the power of the interest rate? That's your little thing. And then you push it out and say, I did an exercise with a lender and a really sophisticated buyer. He wanted a payment at this amount, but it seemed like our sales price was too far apart from what he thought. I worked with my lender and I worked with our company if we can give more incentives. It turns out that we can. And when we ran a 4.99 versus current rates at 7%, we actually had a lower payment with the same out of pocket as the buyer had planned to do. If this is something you're interested in, comment below or message me to find out more. Boom. That's 90 seconds. And if you wanted to throw in some graphic to show 497% PITI, 530, 4.99 PITI, this is the maximum that you need to do.
Mm-hmm.
And just get same theme and repetition and just keep flooding it.
Yeah.
And if there's no one that's doing it at that level, I do have a side project for you that I think would be really cool too.
Nobody's doing that stuff here. There's no builders that are doing that here.
They've never had to do it.
Yeah.
But if they start doing it, well, if you start doing it, you're going to have a leg up and you're going to have a lot of people that try to copy you.
Mm-hmm.
Okay. The other thing you can do is start to create this realtor group where it's like, I don't know, Maki VIP, Blackstone VIP. And I want to let you know first what's coming to market and also give you guys, the best incentives as they come out before we start publicizing it. And you start adding 1, 2, 3 realtors that are localized, then it's like you've got this group that they feel really special because you're giving them all this free information, you're giving them great content. You're saying, hey, real estate group, I want to show you something that we recently did. You may have a buyer that resembles this situation. They came in, they were contingent, and we didn't have a sale, and resale market's going super slow. We put them on our buy before you sell program, and then boom, 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 boom. They moved one time, staged their home. They thought they could only sell it for $475. They actually listed it at $500 and got it at $500. Mm-hmm. Now, does that really, really truthfully have to happen? Obviously, it's better if it's 100% true. But the reality is that I've done it and we're friends. So vicariously, you've done it. You know what I mean? All you have to do is show them the opportunity at hand. It's not like they're going to say, show me the closing statement and that buyer's name.
Yeah.
But, you're going to give them real life examples. Had a client that was only approved on a 450 FHA because their debt to income ratios were too high. She had just enough money to do FHA financing and her 3.5% down. Partnered with a lender that has their own in-house down payment assistance program. They told her to take that money that she had saved, pay off all of her debt, and now she's approved at $500, and she lowered her monthly cash flow to where now she's getting $400 in extra cash flow a month with paying off her debt and borrowing 100% of the new home price. That's a 100% true story. She had no idea she could do that. She was moving here from New York with her mom, and they had saved up enough money just for the 3.5% down payment. And we said, you know what? This is definitely a big time Dave Ramsey approach, but use that money and go pay off your debt. Your debt to income ratio is better. Well, what about my down payment money? I've got you covered. We'll provide your down payment money. The payment on the home is about like $100, $150 more a month, but you lowered $600 in payments. You basically freed up like $350 to $400 worth of cash flow per month. She's like, why didn't my other lender tell me about this? I said, because they don't have it. It wasn't available to them. They can only do stuff that's in the box. She wanted to go to the mountaintops and tell everybody. That's my point is with social media, just be like a storyteller and just give these little 90-second like chunks. But let's just start super simple. Send me those homes that have had birthdays, bottom line price and incentive, max it could sell for. Add to that your community tax rate, please.
Okay.
And then how much earnest money you require. Is it 1% of the price or?
It's just 10,000.
You require 10,000 in earnest money? Mm-hmm. They may have to get off of that on some buyers, but I think if they have one in the bag, they'll be like.
Yeah, like I'm working one with right now, and she is. I was actually supposed to hear from the realtor today. She had some issues with her credit, and I love whenever I have the contact with the lender because then I can talk to them.
Yeah,
but
you have to.
Yeah, but she has her own lender, and so I told the realtor today, if there's any kickback, just let me know, and I can send you my preferred lenders that can get it done, no matter what. And she was also worried about the earnest money, and it's negotiable. We say 10,000, but like for her, I specifically just said 8,000. So
Yeah.
it's flexible there.
Yeah, I think, once you can start providing some trust with your ownership to show, hey, I can get these people closed and I know they're only on the hook for 1,000, and that makes you, you know, kind of throw up a little bit. But the reality is when we start closing these, maybe you guys will see if we can create less barriers of entry, meaning even earnest money, then we can get more offers and get more people in.
Yeah.
Because if we're leading with this big chunk that you need, then people are like, I'm out. I can't even do that.
No. And I don't, because I go through the next steps with people. I don't want to say $10,000 and then be like, ooh, and then they ghost me, you know?
Yeah. Yeah.
So
That's a real problem. That's difficult to overcome.
yeah. Um, so, and of course I'm not gonna just throw out there, oh, like it's $10,000, but it's
Yeah.
not actually
Maybe.
$10,000.
Yeah. Maybe we can go lower, right? Yeah.
Yeah.
No, I hear you on that. Yeah. That's just going to be a little bit more of a dance. And then that's also going to be a you thing to be more um, confident in what you're asking for and telling them. I'm not asking y'all to go to 8,000. I'm telling y'all we need this to be 5,000. We're
Mhm.
missing a whole sector of buyer profile because you guys are putting us in this small box that only a handful of people can do, and we're
Mhm.
potentially losing sales because the reality is the market has shifted from these custom home buyers. Inflation is a very real thing, and people don't have a lot of disposable money on the sideline. Now they can qualify because we have a down payment assistance program that they
Yeah.
can get zero down and get their money back, but they don't have the $500 or $1,000 to them is the same as 10,000 to your previous buyers.
Mhm.
And what's the worst case that happens? Like they bust and you give them back their money. Well, you still are in the same place as when you started. You still don't have a sale. So it's
Yep.
kind of like, guys, I don't know how to tell you all this, but you need to entertain this. This is where we're at in the market.
Yeah. Yeah, exactly. Yeah, so but I'm excited. I feel like there's lots of things to do, and um I appreciate you so much with all your help. The other thing that I wanted to bring up was trying to get my prospects who I know are serious, but they're not that serious yet, to fill out the applications. That
That's
has been
where,
a
yeah.
struggle, and I don't know why.
So there's a couple of approaches that I like to use for that. Number one, it's to get them out of your hair because like the harder you press at them, the more salesy you look. And
Yeah,
the more salesy you look, the more they're like, no, thank you.
yeah.
So that's the two-part approach of that. Number one is get your lender involved in the process because I can get them excited. I can go through all the things and say, look, you don't you want to know like your maximum buying potential? Don't you want to know the clear-cut options that you have? And I can't even begin to research some of these specialized programs unless you apply. It's
Mhm,
free, it's safe, it's secure. In worst case scenario, you're going to get a free detailed credit report that you're going to want to have anyway for your records.
mhm.
So that's the first approach is defer, hand the baton off to the loan officer and say, look, can you crack this? Because I can't. Like I need to get them excited. So
Yeah.
that's number one.
I might send you one already.
Yeah, that's fine. I'll get them excited about it. Well, because there's I think there's a lot of value in people looking at buying right now. I mean,
Mhm.
there's a new person, like we started 2 hours ago, and we said it's a great time to buy. We have a new person in office. The trajectory is changing of the economy. Home prices will follow. We know what happened last time he was in office.
Mhm.
If you don't buy now, you're going to regret it 6 months from now when this home price goes up in 8 to 10% increments.
Mhm.
So scarcity of time and resource is what you're selling. So I would say hand the baton off so they hear it from somebody else. And number two This is the one that most people reply to. If I'm Olivia and you're me, but you're still Olivia, I'm Michael. Hey, Olivia, I would love to entertain this offer that you want to put in on the house. But before we can do any types of offers, my ownership, our company, they won't even begin to dance unless you've gone through one of our preferred lenders so that they know how serious you are.
Mm-hmm.
We have zero ability to negotiate with someone that we don't know can actually close on the loan. And by close, I don't mean just some third party random lender. They know that our lenders not only work for you, but they work for us. And so when our lender comes back and says green light, they're willing to negotiate. And sometimes I know that they're only going to give 10,000, but when I come back and I have the pre-approval and my lender says, you better dance with these people, they're going to buy somewhere, that puts you in the best light possible. And it allows us to negotiate the best terms possible. But if you don't apply, I can't begin to do that for you.
Yeah, that's good.
So you leverage, but they have to get something out of it, right? And what
That's
they get out of it, yeah, what they get out of it is your advocation, if that's a
Mhm.
word, on their behalf.
Yeah.
And you can't be scared to throw that out there sometimes.
Yeah, that's a good one. I haven't heard or even thought to do that yet. And then because like I then have to literally sell them on trying to fill the application out.
That's it. Like, I would really say something along the lines of this is the easiest part of the process for us is to make sure you're fully equipped, approved, educated.
Mm-hmm.
That's the easiest part. But we have a lot of people, a lot of interest. People are coming out the woodworks right now because of the election being done, the trajectory of the economy in the nation. And so they're really, I hate to say it this way. They said this to me, and I wouldn't say this to you, but they don't want to waste their time with people who are not super serious. And so in order for me to go and advocate on your behalf, like I have to have this pre-approval through our preferred lender.
Yeah. Yeah, that's great. Yeah,
Yeah.
I definitely use that. That's
Mm-hmm.
helpful.
By the way, this whole thing is recorded. So if you ever like feel like I don't remember something, I'm going to send this to you so you have it.
Oh, that would be perfect. Yeah,
Yeah.
that would be great. But I did take some good notes. So,
Yeah, I could tell. I was like, yeah, she's taking notes. She's going to be good.
yeah.
But okay, so reverse was a question you had. How do you get people to apply was another one that you had.
Mhm.
Anything else that's on top of your mind?
I don't think so. If anything comes up,
Okay.
then I will just email you, but I don't think so. Not at the
Okay.
moment.
So I sent the email to introduce you to Harlan for the introduction for reverse.
Okay.
I'm going to work on a simple Excel document that you can just plug and play. Do you want it to be the comparison version of like one home versus the next, or do you want to just be generalized to just payments on a specific home?
Um,
I'll do two of them. One is going to be super simple,
yeah.
where it's comparing it, and one is the more generic one, so you can just kind of run of the mill. If you want to know payments, this is what it looks like.
Yeah, that would be great. And I think to do the comparison one too, because like I am competing, like my largest home is listed at 534, but Brightland's largest home is listed at 465. So
So
having
how
to
do we combat that? We've got to assume some relative interest rate that Brightland is hopefully not offering, and go, hey, I mean, if
yeah,
Brightland's just giving you market rates and we're giving you this below rate, this is, now we're comparable to their home.
yeah,
But, we'll asterisk it with, we don't know because we don't work at Brightland, but we know numbers. So whether it's Brightland or another, 460 something $1,000 home, this is what I do know. And you leave it up to them. The reality is, if Brightland was better and their price is lower, why the frick are you wasting my time coming and sitting with me?
yeah,
I know why. Because our house is actually better quality and you're more interested in our home because you already know the price is higher.
yeah,
So you don't need to give them much and they're going to mentally check whatever that objection was. So I don't
right,
think you need to go into the depths of, well, I don't know Brightland's rates and promos and rates, but if you're
yeah,
just comparing prices, here's our home at our price with our rate incentives, and here
Exactly.
is standard market rate at that price. That's it. That's all you need to do. Less
Yeah.
is more. Okay, I'll do two of those. One is just a, hey, plug in this. All you have to do is put the sales price in, and it's going to automatically calculate all the payments.
Okay. That'd
And
be
then
great.
the other one is going to be, you can put in two different sales prices, and it's going to calculate the payments side by side. And right side will be the one that we want to negatively show, and left side is our home that we want to positively show.
Okay.
You'll be able
Perfect.
to tell from it. Yeah, and
Yeah.
I'll simplify it so it's not so busy.
Yeah.
And
No.
I'll take my Insigma and stuff off of it, and I'll make it look like Blackstone Productions, Like,
Thank you so much for all of your help.
no, absolutely. Hey, we're just getting started. Some of the stuff is like, I'm really excited, which is all of the creating the incentive and stuff that we can put out in the market. And then I'm excited to see what content that you put together. And, I would say something is better than nothing. And honestly, just being human and regular and unpolished is actually more attractive to people than super creative, all the way done, zoom in, zoom out, cutting, coming in.
Yeah.
Like, that just seems too salesy. I'd much rather talk with someone who's like sipping on their coffee early in the morning, which is nice and serene and nice, and going, man, just taking a moment. This home is beautiful. We did an exercise on the payments, and I just want to be able to share this with you. Take a look. Boom. You'll be shocked how many people are going to love that more than something that's like way overly done.
Yeah. Yeah, exactly. That's why I think I'm starting to focus on my own social media so that I can, promote the homes that I do have, and then hopefully getting them to invest in, maybe somebody in marketing so they can do a little bit more of a professional aspect for the actual Blackstone
Mm-hmm.
profiles, all of that, because
Mm-hmm.
that's completely separate from what I do, you know.
Mm-hmm.
So that is definitely a goal, and I'm excited. I'm definitely working on it. It is a work in progress for my social media, but it's a very fun part of this job. So I'm grateful that I can do
No,
that.
I'm excited for you, because for the same things that excite you in your first year in this are the same things from the lending perspective, 25 plus years. The challenges don't change, people don't really change.
Mhm.
You get more and more, polished and honed in on the process and what it takes, and you just get better and better at your job. I still love it. I mean, I work every day. Saturdays and Sundays for a lender, a builder's lender, are not like off.
Yeah.
That's the highest and busiest days for my builder partners. So, but the reality is, like, I can do my job anywhere at any time, on vacation, on the beach, at the lake, in the woods, at the ski resort. It's been a long time since I've done any one of those things, but I could if I actually took those trips. But
Yeah.
no, I love what I do, and more than anything, it's when I do it with good people. Like, uh, the majority of the people, I don't know all of them because it's changed so much at Brightland, but it was always fun working with them because they're so on it, so studious, and all of the project coordinators. Linda makes me laugh sometimes just
Yeah.
because I think I'm the one that referred her to Brightland. Actually,
Really?
I used to work with her when she was the project coordinator, closings coordinator for Braun. I referred her to Braun, and before Braun, I actually worked with her she was a closing coordinator for Legacy Homes. Um, yeah, it goes ways back. I got in this industry in 2001 and started with Builder in 2003. What year were you born?
2003.
Yeah, I figured right as I was saying that, I was like, I bet that's probably, yeah. So, nonetheless, I'm super excited. Lean on me however way you find fit and helpful information you need. But let's just follow up with the quick and easies, those homes, the price, the giveaway price and incentive, the max it would sell price, and then we can backfill the incentives, the tax rate, start to work on your Olivia's, social media boost team.
Mhm.
Um, Probably wherever you think that they will hang out the most, whether that's Instagram or Facebook, and just create a group and watch it grow. Let's just start with that, and all the other things that we'll get to that when we get there.
Yeah. Yeah, that's awesome. Well, thank you so much again. This was super helpful. And
Oh, my pleasure. I love
think
doing this.
build my arsenal that is
Yeah.
just started.
And that's the reality is like, you've got to, don't look for your company to ever give you anything. You
Yeah.
know, and I don't mean that as a dig, like create your tools, create your advantage, go and beat up Brightland or the next builder that dares try to sell against you.
Yeah.
Oh my God, what's her name? The way Melody sells or used to sell, like you be the new Melody Monroe.
She still sells like crazy.
It's insane, but she's got a system and a process, and she's probably never lost an ounce of confidence she has in her capabilities.
Hmm.
And I've talked to many, I used to work with her, and I've sold with other sales agents that like they are scared out of their minds. Like, I hate selling against her. It's so hard, this, that, and the other, you know? And so,
Wow.
yeah,
Yeah.
that's awesome. Well, very cool. I appreciate your time. I'll look for your stuff to follow up with, and I'll follow up on my side. And if anything comes up in between, just a phone call, text, or email away. Okay.
Okay. Thank you so much again.
You're very welcome. Take care. Bye bye.
Have a good week.
You too. Bye.